We all have to worry about taxes, but let's be honest. Most people don't really understand how they work. Every paycheck you get, a portion is taken out before you even get to see it. And when tax season rolls around, you're stuck scrambling through documents trying to figure out if you owe money or if you're getting a refund. And let's be real, most people are just guessing.
In fact, studies show that only around 25% of people actually feel confident about their tax return. That means that most of us are worried that we made a mistake that could cost us later. And so in this video, we're going to be breaking down how taxes work, what you need for them, and how to avoid the biggest mistakes that most people fall into.
At its core, taxes are how the government gives us access to things, like roads, schools, and libraries. A portion of your income is used to fund these public services. Now, the biggest tax you'll deal with is the federal income tax, and that's what we're going to break down first.
Your income tax isn't just a flat percentage, it's based on tax brackets, and here's what that means. The US has a progressive tax system, meaning the more you make, the higher your tax rate, but only on the portion that falls into the higher bracket. People often think that if they make more money, they'll have to pay more in taxes and they'll actually be losing out, but that's not how it works. Let's say, for example, you make $50,000 a year. In 2024, the first $14,600 is tax-free because of what is called a standard deduction, and we'll get to what that means in a second. The next portion of your income would be taxed at 10%. The portion after that would be taxed at 12%, and so on. The ranges for these brackets change every single year to adjust for the standard of living. So if you're curious what they are right now, a quick Google search can show you that.
Depending on where you live, you might also have state or even city income taxes. Some states, like Florida and Texas, have no income tax, while others, like California, have some of the highest state tax rates in the country. FICA stands for Federal Insurance Contributions Act. These taxes go towards Social Security and Medicare. If you're an employee, you pay a portion of your paycheck towards FICA, and then your employer will match it. But if you're self-employed, you're responsible for the full amount yourself. That's why many freelancers and business owners are often surprised by their tax bill.
Now, one of the biggest things that impacts your taxes is your filing status. There are 5 main filing statuses, but for most people, it's either single, which is when you file as an individual, or married filing jointly, which is when you and your spouse combine your income onto one tax return. This matters because the rules are different for each one. Single filers get a $14,600 standard deduction in 2024, and married couples get a $29,200 deduction. For example, let's say both you and your spouse make $50,000 each. If you file individually, each person gets the single standard deduction of $14,600, bringing the taxable income for each person to $35,400. Since both people file individually, the combined taxable income is $70,800. If you file jointly, the couple gets the joint standard deduction of $29,200, and so the combined taxable income becomes $70,800.
Now you may be thinking, that's exactly the same amount, but here's where married filing jointly really helps. Tax brackets are twice as wide for married couples, meaning more of your income is taxed at lower rates. Also, some tax credits aren't available for lower levels for single filers, meaning there are higher income limits for married couples. This is why filing jointly is almost always better for married couples. It maximizes deductions and lowers overall tax liability. Before you can file your taxes, you'll need to gather your income documents. If you have a job where you get a paycheck, you'll receive a W-2 from your employer. This form shows how much you made and how much was already withheld for taxes. On the other hand, if you're a freelancer, independent contractor, side hustler, you'll have a 1099 instead. But here's the catch. No taxes are withheld on a 1099. That means it's your responsibility to set aside money for taxes.
For most people, taxes are due April 15th every single year. If you don't file on time, you'll face a failure to file penalty, which can be up to 25% of what you owe. And if you don't pay on time, you'll owe interest and penalties on the amount due. If you don't know exactly how much you owe or are behind on filing, you can send an estimated payment to the IRS before the deadline and then file for an extension. Even if you overpay, you'll get a refund later, but this helps you avoid penalties and interest. Tax deductions and credits help lower how much you owe. Deductions reduce your taxable income, and credits lower your tax bill. So if you have a $1,000 tax credit, you are basically given $1,000 to help pay your taxes.
Some common deductions include student loan and mortgage interest, medical expenses, and mileage if you're an independent contractor.
Common tax credits include the child tax credit, the earned income tax credit or EITC, and education credits. Firstly, forgetting to report something. If you worked multiple jobs or did freelance work, you have to report all income from all sources.
Not paying estimated taxes. If you're self-employed or have a side income like freelancing, gig work, or rental income, you should pay or at least set aside estimated taxes every quarter. If you wait until tax season, you will end up with a huge tax bill.
Next is not claiming all of your deductions or credits. Many people leave money on the table simply because they don't know what they qualify for. Some of the most overlooked ones include student loan interest, retirement contributions, and the earned income tax credit.
Taxes can be confusing, but once you understand how they work, you can save time and money by avoiding costly mistakes.
So if this video helped, make sure to hit that like button and subscribe, and let us know what you want to know more about in the comments. We've got more financial tips coming soon, so we'll see you in the next one.